All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. We are going to do what we do every day, right? We're going to talk about kind of how I read the market, give you a little bit of insight to what I'm looking at, what is meaningful to me. We look at the NASDAQ, the S&P, light sweet crude, and gold futures. Those are the markets that we analyze and interpret live every single day. But what I'm going to do in this video is kind of tell you exactly what I personally did, okay? Like where I put my money to work, and so that you kind of have an understanding of how I analyze the market. So this is light sweet crude that you're seeing on my screen here. Top left, you're looking at my own 4-hour analysis, right? I do all this on my own. Bottom left, you're looking at the United States dollar, the US dollar, okay? And over here, you're looking at a 5-minute chart of light sweet crude oil futures. So you can see I have some markings on the chart. The channel structures are just my hand-drawn analysis. And I'll give you kind of a quick overview of what you're seeing here. So if you see these little eyes, this is economic data or information numbers that were released. So I need to always be aware of when that's happening. These little flags are when the markets start. So the crude market technically opens at 9 a.m. Eastern Standard Time. The US Open is at 9:30. So I always want to be aware of what's happening. Outside forces that could be influencing what price is doing. So from there, I'm basically just watching price action, looking at volume very carefully, looking to see where kind of my opportunities present themselves. The first thing that I need to do is to understand the context of what the market's doing. So if the market's making higher lows, right, I want to look for buying opportunities. If the market's making lower highs, I want to look for selling opportunities. So my first order of business is always to determine what direction is the market going, right? So we were having some consolidation here, but we were holding the VWAP really nicely. Price gets pushed up higher. We come in, we do get the 830 data. We come down, we start selling off. So notice here we got a little bit of indecision back at the VWAPs. I don't necessarily like to trade at the VWAP, okay? Will I trade towards the VWAP? Yes. Will I use the VWAP as support or resistance? Yes. But I definitely, am not interested in selling into it. So I'm really looking for price to kind of come to what I'm looking for. So we've started to establish here that these highs are descending, right? So we have an impulse, we have a correction, and we have a big impulse. All right, so now we know that the market's trying to go lower. We take a very, very large aggressive correction, and then we start to impulse back down again. Notice that we place a lower high, okay? And you should mark this stuff on your chart, right? What is this? It's a lower high. We're making lower highs. So we want to be aware that we're making lower highs because chances are we're going to now make what? A lower low. Okay? It's just a sequence of the way the market works. Market is very choppy. Okay? When I see big wicks like this, I am very uninterested in trading the market. Why? Because big wicks like this are going to create a lot of risk. Because if the market's going to potentially turn back against me, I'm not willing to lose a lot of money because I'm placing a heavily leveraged position. So we get an impulse to the downside and we get a correction. This is where I use the VWAPs. Okay? Notice, I'm going to zoom in here, right there, where we corrected back into the VWAP. And there was a bunch of buyers that got very absorbed. As soon as this candle closed, what happened? Boom. We broke down. Now, from an exaggerated point, we made an impulse. We made a correction. We placed a lower high. My expectation is now what? A lower low. So even when I came down into this area, I had more numbers coming out at 10 a.m. I wasn't very confident in trying to buy this because, in theory, my lower high should lead me to a lower low. And that's exactly what ended up happening. Right? We come back up, we come all the way down, we come back up, we put in a double bottom. So double bottom's been placed. What am I looking for now? I'm now looking for a newly appointed higher low. Okay? Where do I get that? Here's my newly appointed higher low. Okay? Market pushes up. We get a bunch of sellers that get absorbed here. Market pushes up. We take a correction. What did I place? I have my double bottom, my higher low, my higher low. Right? So where am I now looking to try to get long? Right? If I'm trying to get long here, where do I want to trade to? I want to take profit at the VWAP. Right? I want to take profit at this prior high. Because I don't know if I'm going to get through this area. So if I'm at an area where absorption occurred previously, new absorption occurred right in the same vicinity, I feel pretty safe that we're going to get a bump back higher. That's what happened. We got a bump back higher. And then notice we spent almost a half hour doing nothing. Why? Because the buyers here were getting absorbed. Okay? Buyers are getting absorbed, getting absorbed, getting absorbed. Can't break they just can't get through, right? Sellers are just taking it, taking it, taking it, taking it. Finally, we pull back, place another higher low at the rolling VWAP. If I'm going to buy this, I'm going to place my stop right underneath it, and I'm going to target what? I'm going to target this absorption area first, and then I'm going to target the session VWAP right there. Okay? So notice double bottom, higher low, higher low, higher low. What should I then be expecting? Higher high. Okay? Notice we then break this area and we place a higher high. We then fall into a very aggressive trend. Okay? When you fall into a very aggressive trend like this, you must be prepared to say, all right, I now need to find wherever I can try to enter this trend with the least amount of risk in case I'm wrong. Because chances of a very strong pullback or very strong correction when the market is aggressively going higher is probably not common. This little candle here was a wonderful example of that. Okay, we had some sellers being absorbed in the bottom portion of this candle, a nice finished low, and then we pop up. And then notice these buyers here all start getting absorbed. There was resting liquidity here at 83. Once that liquidity was consumed, notice that the sellers started getting absorbed again. And then we ultimately pushed into the channel structure and into the high right now, which takes us to a new session high. Right? So the name of the game is this, guys. Okay? If the market's going higher, what are we looking for? We're looking for higher lows or areas where we can identify a breakout into momentum or with momentum. If the market's going lower, what are we looking for? We're looking for lower highs or an area where momentum provides us a breakdown that we can enter the market. If the market is choppy like this, okay, if you see a lot of these big wicks, right? Like I don't like trading with a lot of these big wicks. Why? Again, it adds more risk. The last thing I want to do is lose money, okay? A day that I break even or a day that I make a small profit or a day that I don't take a loss is a winning day to me, okay? This is not like entertainment. The market provides a purpose. That purpose is to provide an income for me, okay? My skill set is what allows that to happen. Same thing in your situation. As a trader, your skill set will provide wins, losses, risk management, emotional surroundings, okay? So, and that skill set continues to build with time. Days, weeks, months, quarters, halves, years, decades, right? Like, it's going to take time. It's going to take time. And you have to be willing to put the time in. There is no substitute for live screen time. That's why the product that I build, or the service that I offer, I should say, is built around live screen time. With me, in the market, analyzing, interpreting, and providing expectations of what's happening and what is possibly going to happen next, based on 13 years of experience. Okay? I'm a very casual guy, right? I live a very moderate life. This is not about Lamborghinis or speedboats or Rolexes or any of that stuff. This is about trading excellence. And excellence in trading comes from understanding that patience, discipline, and consistency is ultimately all that matters, right? Most of you are looking for entertainment or to get rich quick, and I don't mean that to insult anybody. I just mean the reason that statistically retail traders fail is because the barrier to entry has been set so low that basically anybody can get into this business. And nobody's willing to put 3 to 5 years of studying the market in so that they can achieve that level of excellence, right? Nobody's willing to put in 10 years of staring at charts and understanding the interaction, understanding, the auction process between buyers and sellers, understanding all the components that come into it, order flow, volume interpretation, liquidity, how all those things play a role in each and every decision that you're about to make with your own hard-earned money. So, is this business for everybody? No. Right? If you're not willing to dedicate at least a handful of hours every single day, uninterrupted, staring at the computer, more often than not placing a trade, right? Just understanding what's happening, then this is going to be a difficult journey. Okay? Somebody telling you where to buy or sell doesn't accomplish anything because you have no understanding of it. And as soon as they tell you where to buy or sell and you don't have a good experience, you're gonna think the worst of them. I have lost as many trades as I've won this week, and I am net profitable. That's how this business works. Okay? You're going to lose as much as you win, but your winners need to well outweigh your losers, and that is achieved through risk management. So, just want to give you guys kind of some thoughts on kind of how I navigated my day. I did not like these wicks, like I mentioned. I do not like these very large candles, like I mentioned. So, for me, it really comes down to, can I find a calculated spot? I wanted to short the market here, but I didn't because the VWAP was holding. Okay? I had consideration for shorting the market here. However, we were at the VWAPs, and previously the VWAPs held very nicely. So I didn't take that trade. There was a lot of indecision here. You can see we had a lot of whipsaw. Didn't take that. Why? 9 o'clock open. Okay. I was very interested in trying to short these two little candles as a hesitation to the downside. Would I have been right in theory? Yes. Would I have been stopped out based on the 9 o'clock open? Yes. Okay. So my theory was right. My thesis of what was going to happen next was correct. However, because I run such tight risk management, I would have got stopped out, and then the market would have ultimately done what I anticipated it to do. So I didn't touch it. Right? I know the 9 o'clock open for crude brings a lot of volatility. I know the 9:30 open does. I know economic data does. I know the inventory report does. So just sit back, hang out, relax, sip my coffee, take it easy. Right? No reason to make life any harder. Market pushes back up here. Again, these wicks make a lower high. Right here is where I start getting very interested. Right? Because we take a impulse, a correction, and I'm looking for a lower high, and I'm looking for a lower low. This right here was my calculated low risk entry. I short here. Market goes in my favor. If it didn't go in my favor, I would have got stopped out. Okay, so this candle closed right here at about 76. There was a little slippage on the way in because it was moving quickly. So from 74 to about 89, about 15 ticks. Okay, if I was wrong, I was going to lose 15 ticks. But if I was right, I was targeting these lows down here at 82.16. Now I knew I had a little channel structure here, so I had a little cause for concern. So obviously I pulled some profits quickly. But notice price never came back to my entry and did end up making the lower low because we placed a lower high. Right? All I had to do was look for the spot that made sense for my personal trade plan. Okay? These are the things that I analyze, interpret, and provide expectations for every day live from 8 to 11. So for 3 hours a day, 15 hours a week, 60 hours a month, I help you see the market through the lens of somebody who's been watching it now for 13 years. Right? Then what does the market do? It gets choppy, places that double bottom, and then we start putting in these higher lows. Right? Where am I interested in buying these higher lows? Where these sellers are getting trapped, where these sellers are getting absorbed. That's where I'm interested, right? Where am I targeting? Well, I know I got the VWAPs here. I got to be very careful because the VWAPs can very easily act as resistance, whether it's the rolling VWAP, the fixed VWAP, or in between them. And you can see all the buying absorption that happened inside of them before we finally pushed higher. What did I like? I liked this higher low that closed above the rolling VWAP. Where did I target? I took profits extraordinarily quickly into this absorption and then here at the session VWAP. If it went higher, great. If it didn't, it happens. I get stopped out. No big deal. As long as I start paying myself, I start the process of protecting myself, meaning moving my stop into my entry or into the profit. And then you can see right here, great spot to get long. Right here, sellers were getting absorbed. This liquidity got taken. They ultimately, price overtook the liquidity, and you can see we've made this really aggressive push higher. Right now, we are at the high of the session, potentially placing an aggressive high here around 83.60. So if you want to learn more about joining me in the live market every single day, there's some links below. If you have questions, feel free to leave a comment. I will personally answer them for you. If you enjoyed the video, please like it. Okay. If you haven't subscribed to the channel yet, perhaps do that so you get the next video. My goal is to recap my own personal trades, my own personal thought process every single day with you guys so that you have an understanding of when you come to trade with me, what I provide, okay, and how my thought process works. Because if you don't have an understanding of that, then you're going to come in and be completely blind. So that's the whole purpose of doing these videos, and because I want to hopefully help you guys shorten your learning curve, overcome some of the hurdles that I personally had to overcome, and help you along your trading career, right? My goal is to change that statistic for serious traders who are genuinely interested in achieving success. So God bless, guys. I appreciate each and every one of you, and I will see you in the next video.